Welcome to our channel, Alliance Real Estate and Finance, where we bring you the latest discussions on the housing market, personal finance, and economic news. Be sure to subscribe to our channel, click on the bell so you'll be notified every time we upload a new video, and give us your thoughts on today's video and what we talked about in the comments section below. We'd love to hear from you.
We're going to just talk a little bit about what's going on in the market. We know that a lot of people are having a hard time making offers and getting offers rejected just because there's sheer competition in the market today. So we're going to walk you through some ways to make a strong offer, but protect yourself. But, actually, before we get started, I wanted to say congratulations, Brian. We finally closed our deal.
Right up until the last minute problems.
Yeah, and hopefully we can touch on some of the issues that we experienced, because I think there was a lot of lessons learned in this deal, not necessarily from my end, but it really speaks to how people can make an offer and not be very well protected by their agent. So hopefully we can talk a little more about that and talk about how to make sure that you as the buyer know what's in your contract and make sure that you're staying on top of those contingency timeframes within the contract, and knowing and understanding how to protect yourself. Let's start with just some general points of making an offer and being prepared to put a strong offer out there. So just give us some general points in terms of how to make that offer.
All right, so the general points that we're gonna, a few things, I guess these are for before you get out there. Review your finances and determine your affordability. It's critical that you get pre-approved with a bank or a mortgage lender. And as a listing agent and as a buyer's agent, I really want you to be pre-approved with somebody that is local. I want somebody working for you on the lending side that has underwriting in the same area as we are. The big banks like Bank of America, Wells Fargo, everything is distributed across the US. You may have a loan officer here underwriting in California, and that can cause some issues. So get a good local lender that concentrates on just doing mortgages, not banking. I'm really all for the people that are just doing mortgages. The next point is know your contingency deadlines. Your agent is there to remind you of those, but you do have to have some personal accountability. When your agent has that contract for you, I personally provide what I call a transaction roadmap, which spells out everything from the day we're under contract to closing day. So it's always good to go back and review that. If your agent doesn't do that, well, next point, find a trusted agent. Critical in today's market. If you're in the DC metro area, you can contact Ian or myself.
And I want to touch on something that you mentioned, Brian, which is know your finances. Guys, it's critical importance that even though you're going to a lender to get pre-approved, understand that the lender is pre-approving you based on your gross income. So it's very important that because you know your obligations the most, how much house you can afford. Get the pre-approval, but shop for homes based on what you can afford on a monthly basis. The other thing that I really want to touch on that Brian mentioned is ensuring that you find a trusted agent. There's a lot of agents out there, and we have agents that are new into the industry. We have agents that have been doing it for years. The reason Brian mentioned find a trusted agent in this market, this is a market where there is a shortage of inventory, multiple offers on several homes. And it's very critically important that you have an agent that knows how to write a strong offer. And even when that offer is accepted, because we're making offers that are out of the norm today. A lot of contingencies are being dropped from the offer. So you want to make sure you have an agent that knows how to protect you if something were to come up, so that you can walk away with your earnest money deposit, which we'll get into in a little bit. Anything else that you want to add as a general point?
No, I think we covered it.
Okay, so let's jump into earnest money deposit. Tell us what you're seeing in terms of earnest money deposit on the market today, and how can we make a strong offer, along the lines of the EMD?
Yes. So as real estate agents, we're wearing two hats depending on who we're working with. We're either the listing agent working for the seller, or we're the buyer's agent working for the buyer. So when I'm the listing agent, I want to see the highest earnest money deposit as I can, whatever a buyer's willing to write that amount for. And that's because that money is on the hook. That money is there to make sure that the buyer complies with the terms of the contract and moves forward. Now, the buyer is always going to have some contingencies that are going to allow them to get out of the contract safely and retain that earnest money deposit. But if they don't adhere to the terms of the contract, then that money is at risk and the seller can go after it. So based on that, when I'm the buyer's agent, I want that amount to be as low as possible since that money is at risk. But in terms of making a strong offer, there's several things that we discussed offline about what the buyer should be thinking about when they're putting that money at risk. Property condition is one of them. And one of the things that you're always bringing up, which is critical and important, is the strength of the financial approval that the buyer has, what their finances are like. Can they take a $10,000 hit? Not everybody can.
The strength of financing approval, I want to dive a little bit into, because you and I just went through a deal. We got several offers. So we had to compile all those offers and really just look at them on a spreadsheet.
Yep.
However, one of the things and one of the driving forces in looking at the offers isn't always, let's look at the highest offer.
Right.
So if we are able to dive a little deeper into, can this buyer close this deal? And that's where a lot of times the financial information sheet comes in, right? So if we have a financial information sheet in front of us, we can look at it very clearly and say, okay, this buyer is not necessarily the highest offer that we've received today, but we can see from a financing perspective and working with the bank that if something were to happen, let's say appraisal doesn't come in where we want it to come in, that buyer has the means to be able to continue the contract moving forward. And that is critically important.
Yes. Yeah. And that buyer financial information sheet, it's personal. It has things listed on there, information that we're requesting as the listing side. The seller's requesting this information to determine the buyer's financial strength. And a lot of times the buyers or the buyer's agents, they don't want to give that form up. But I actually had another buyer where in the listing agent's instructions for submitting an offer was the requirement of a buyer financial information sheet, and the other offers didn't come in with that, and mine did. We supplied that, and based on that, they went with our offer because they felt very confident of my buyer's financial strength at the time. So, my recommendation is, if the listing agent is asking you for something, provide it. If your buyer's not comfortable with it, you need to talk to them that they may lose out on this offer based on not submitting one little document.
Yeah, I completely agree. And in this market, you absolutely need to adhere to what your agent is telling you. The other thing that you mentioned that buyers tend to overlook is property condition. Now, in this market, there's so many people going to look at a home, but it is very important as buyers, as you're looking at these homes, don't just go and glance at the property, because now if you go and you glance at the property and you want to write a strong offer, you don't have the confidence of what's in the home to be able to write that strong offer. So it's very important if you can get your agent in there, and I know timeframes are being shortened and shortened to look at the home. You used to be able to go schedule for an hour, half hour. Now it's coming down to 15 minutes. But if you can go into the home and really do your own inspection of the property, take the time to do that. Make sure you're looking at the windows. Make sure you If you can see the roof, you're checking out the roof. Make sure you're doing all of those things that are important to you so that when you write that offer, you are actually confident in the offer that you're putting together. All right.
Yes. Yep. A couple other points with regards to the earnest money deposit. Your appraisal confidence. How confident are you that the appraisal is going to come in? And if it's not, and we're going to talk about the appraisal later on, just keep in mind, if you're outside of your appraisal contingency and the appraisal comes in low, you're on the hook for that difference, possibly, depending on how your offer's written. And if you decide to walk away, your earnest money deposit is at risk. And then we kind of touched on this, terms of the contract. You know, you have to adhere to the terms of the contract. It's a written contract. It's not there for people to just change their mind on a whim and walk away. You have contingencies in place and you have to adhere to them. So
and let me jump in real quick, because you mentioned something earlier, and you went through it very quickly, but I want to make sure that I'm giving you credit for it. The transaction roadmap.
Oh, yes.
You know, we've worked together so many times, and the transaction roadmap for a very busy buyer or individual, even seller, you know, it's really a good summary document that tells you step by step everything that you need to know. You don't have to dive through all of the contract terms and have this big pile of contract papers with you. You do a good job of putting that together. I think it's a very excellent document, and you went through it very quickly, but I think that roadmap deserves a lot of credit.
Thank you. I appreciate that.
Every once in a while, I try to give you credit for something.
Right. All right. So everybody's always asking us as the real estate agent, how much do we recommend they put down for the earnest money deposit? And it depends. What are you comfortable with? 2 to 5%. I've heard of earnest money deposits as high as 100,000 in this market.
Yeah, it's always a scary number to see, but you know, this is the market we're in, and this is what it takes to actually get a strong offer in place. All right, so the next item is property inspections. One of my favorite topics, and just happy to go over this with everybody. But again, you know, I'm gonna defer to you, Brian, to kind of walk us through what you're seeing on the market with property inspections, and then we can talk a little more about how to make your property inspection contingency stronger.
Okay, very good. So in the time frame of the beginning of this year to now, we were having buyers being able to do inspections at the very beginning of this year, to buyers writing offers that were as is, with the right to inspect and right to terminate if they didn't like what they saw in the inspection, to now where buyers are not requesting to do an inspection, and they're doing what's called walk and talk tours with an inspector within a 30-minute time frame of their showing. So, you know, in some cases, not many, but in some cases, you are still able to negotiate to be able to do an inspection. But in many cases, you're doing these walk and talk tours with your agent and an inspector. So you have to really be comfortable in moving forward with that, because once the house is yours, you're not going back to the seller or the listing agent or even your buyer's agent or the home inspector saying, hey, we didn't know about this issue, we want you to pay for it, or we want to go back to the seller. That's not going to happen. Once that house is yours, it's yours. You're buying it as is these days, and you're taking on that risk. So skip the inspection contingency if you've done a thorough review of the property. And you know that if the property's a newer property, you can have some comfort level. The roof, that's a tough one. You know, you're looking at the roof from the ground level. Sometimes you can get up into the attic if they've got pull down steps. Go up there, look in the attic, look at the underside, the wood, see if you see water stains. Have you identified the condition or the install state of the major appliances, the hot water heater, HVAC system, the roof, if you have that information? With a little bit of digging, every appliance has a serial number on it. And with a little bit of digging on the internet or asking a home inspector, you might be able to find the year, the manufacture date of those items. Plumbing. I know plumbing is your favorite. How about that one house that you bought that we couldn't do a water test?
Oh. Well, it's funny. Let's talk a little bit about that because there's been two homes. So the Germantown home, I think we went through and we did a full test of turning on the water and checking for leaks. But let's talk about my favorite house where we couldn't turn on the water. And I did everything I can to identify why we couldn't turn on the water. So let me pause and just give our viewers a breakdown of what happened. This was a foreclosure home that we were purchasing, and the bank would not allow us to turn on the water for the inspection. However, I was still wanting to move forward with the deal. So we continued to move forward with the deal. I went to the property several times to see what can I identify, why can't we turn on the water? I think I saw a card there of the company that was maintaining the home because the home was vacant. I called there, I took water bottles, I poured it down whatever drain I could find. And then we went to closing. I got the keys. I called WSSC, our water company in Maryland. The guy came, it turned on the water. I thought it was raining outside. No, it was raining everywhere inside of the walls because all of the pipes all throughout the house had burst. But luckily, when we structured a deal, we put in some wiggle room for the worst case scenario. So again, guys, if you don't know, don't put in the highest offer. Put in an offer that allows you to plan for those unknowns. And in this case, we had to basically break apart all the drywall and repair all of the pipes. Luckily, I have a good team that was able to do that at very cost effective for me. So lesson learned. Always do your thorough inspection. You know more than you think. And if you don't know, make sure you take somebody with you that knows a little bit about homes if you're going to write an offer without an inspection contingency.
And let me point this out too. So I went back to the listing agent, I think 5 times, asking her if we can put the water back on, and flat out, she said that bank just will not allow it. The bank that owned the property, because it was a foreclosure. And she assured me that she was in the property when the water was turned on and that there were no leaks. Now, I don't believe she was lying. It could be that the time that the pipes were sitting empty, something happened. But again, and how much knowledge does she really have? She's walking through the property 5-10 minutes maybe. And, that's not a lot of time to spend in there. So, all right.
Yeah.
Back to the other items here. Electrical check, that's a difficult one. During a home inspection, your home inspector, under normal circumstances, he's got what's called he or she has what's called an outlet checker. It's got a couple of lights on it. It's going to tell you if the outlets are wired properly. I actually have one of those, and I haven't done it yet, but it's not a bad idea to take that in with me when I'm showing the house. Again, we're limited sometimes to 15 minutes for a showing. So you're just going to spot check some outlets to make sure that they're wired properly. Termite damage, another thing to look out for. So you gotta, like Ian was saying, you have to do as much investigating in that short amount of time while you're there.
Yeah, and I think termite is one of those things people generally, they go into the home and they look inside of the homes, but make sure you inspect the outside of the home. Look for any wood rot, any possible signs of termite damage. You can obviously Google termite damage on the internet to get a good visual of what it looks like, because that is one of those things that if you miss, it's going to be pretty costly for you.
Yeah. All right, let's move on to appraisals. We have a lot of experience with appraisals, right? Appraisals is next.
Yes.
All right, so what are buyers doing today? Buyers are skipping the appraisal. Now, when we refer to skipping the appraisal, if there's financing involved, they can't actually skip it. When the bank is involved and they're getting a loan on the property, unless they're putting a significant amount of money down, the potential for an appraisal to be skipped in that scenario is possible. But most of the time, the bank is going to do an appraisal. They're going to base the loan on the lower of the two values, either the contract price or the appraised value. So a buyer can waive the appraisal contingency, meaning that they will guarantee, if the appraisal comes in low, that deficit amount. And so that's cash out of their pocket. That's going to be money coming out of their pocket. Appraisals in some cases are coming in lower than the offer price. Buyers must come prepared to deal with the increased down payment in that case. And then there's always buyer's remorse or shock when that might happen.
So let's talk about that for a moment. Buyers are skipping their appraisal contingency.
Mm-hmm.
And the appraisal contingency really is their way to negotiate the price of the home or simply back out of the contract if it doesn't come in at that price. And it's very important that our buyers know that, if you skip the appraisal contingency and the appraisal comes in low, you're basically stating you will cover the difference. And I'm not so certain that a lot of buyers have a good understanding of that, especially if the appraisal comes in $20,000, $30,000 undervalued. And so it's very critically important that your agent work with you to give you at least a range of what that appraisal could come in at. And of course, your agent is not a licensed appraiser, but this is just a range from their perspective and knowledge of the market. Hey, I think we'll fall within this range in the appraisal value. And if we skip the contingency, make sure that you're prepared to cover the difference. I don't think a lot of buyers understand what they're jumping into when they skip their appraisal contingency.
I agree with you on that. They're counting on something to happen that may or may not happen. You can have two appraisers go into the same house and come up with vastly different values.
Yeah, we clearly saw that 2 weeks ago, or I think it was 2 weeks ago.
Yeah.
Two homes, one was original everything, two different appraisers, and somehow they came up with the same value, even though one home had granite, stainless steel appliances, wood floors, updated cabinets, whereas the other home had pretty much what the house was built in, and I think it was the early 80s.
Yeah. So that was our case point right there. So you're going to skip the appraisal contingency. Make sure you've had an honest talk with your agent about what the value of the property is in the current market in that neighborhood. They're going to stick to neighborhood comps if they have them, and be prepared. Do you have sufficient cash to cover the shortfall? And in this market, it's tough because a lot of buyers are waiving this appraisal contingency, but you could protect yourself a little bit. You could add the appraisal contingency with language in the contract that you'll cover a certain percentage of a deficit if a low appraisal came in. So for instance, you might say that you will cover up to $5,000 if the appraisal comes in low to maximize or to minimize that hit on your cash flow.
That's a very good point. I think that's a lot of things, an option that a lot of buyers don't know that they have. And if you couple that with a strong EMD and a good financial information sheet, you're well on your way into making a very strong offer, but yet keeping yourself protected. Escalation clauses.
Yes.
I never like escalation clauses. It's not something that I will personally do, but but they had popularity back in the 2008 financial market, housing market, and they're starting to pick up again. So, let's talk a little bit about what is an escalation clause and how can we use it to our benefit today while still making sure we're protecting ourselves.
Right. So the escalation clause, you're escalating the offer price in an incremental amount up to a maximum price, a maximum value. So let's say the property is $300,000. You could escalate it by $1,500 to a maximum of $5,000. And if the escalation clause is invoked, then your new contract price is $305, depending on the other offer. So it's going to allow you to set limits and makes your offer more competitive as you're escalating above the highest offer if there's another offer present.
And I've heard of escalation clauses with up to a max of 100,000. So yes, they're out there. But I want to make sure that everybody captured a key thing is that you mentioned. There is a cap on your escalation clause. So
Yes.
if you don't want to go $20,000 above the offer price, you cap your escalation clause. However, you put in there how much you want to increase it by until you hit the cap. So it's a good tool to have in today's market, making sure that you're setting the right cap that fits you.
So one tactic that buyers can use is use an interesting incremental amount. Don't just make it $500 or $1,000. I've seen some people, they'll do $2,001 because somebody else is probably going to pick $2,000. So
Right.
that their offer $1 better. Of course, we mentioned this earlier. The final sales price isn't always, the deciding factor. It's a lot of factors that will make up how strong an offer is. And then escalate to a maximum amount that you're comfortable with and can afford. We don't want people overextending themselves. We don't want to get into another situation where people are getting foreclosed on and walking away because their emotions got the better of them and they've escalated higher than they really wanted to and are comfortable with.
And just to make the point, in the deal that we just did, that we just closed on last week, I think, we actually didn't select the highest offer. We selected the
Right.
offer that we thought the buyer had the strongest financing to be able to go through. But we actually didn't select the highest offer. So guys, don't always think it's simply about the highest offer. I mean, that is definitely a critical factor for a seller when they're looking. But a seller also very much cares about, can you make this deal go all the way to the finish line? Because at the end of the day, they want their cash. They don't want the deal to fall through and then they have to go back on the market. So it's a pretty big ordeal to go back on the market and have your homes be opened up to showings again.
Yeah, and so we had 6 offers total, but one offer pulled out almost immediately. And your top 2 picks that you had were $8,000 apart, actually. So
yeah.
$8,000 lower than the one that you selected. So and you were really strongly going towards that offer so it just goes to show you it isn't always about that final dollar amount.
Very true. All right, free rent back. Yeah, let's talk a little bit about free rent back. Go ahead.
All right, so for people that don't know what a rent back is you're going to settlement. You as the buyer and the seller, you're going to settlement. The buyer owns the house and there is a 3-page rent back agreement where the buyer is allowing the owner to rent back the property and stay in the property for a specified amount of time. A lot of times this is done to allow the seller to find their new property maybe, or their new property might be new construction and it's not ready yet. Or they're transferring and they're, out of state or somewhere else, and it's just the timing. So as the seller, you're wanting to get that deal sold. So you have your money in the bank and it's done. You just need a little bit of extra time in the property. In balanced markets, typically the seller will rent the property back at the buyer's current principal, interest, taxes, insurance, and association fees on a per diem fee, per diem amount, multiplied by the number of days that they need. Lenders for the buyer do not like to see rent back situations last more than 2 months. So the seller's got to be able to get out within the 2-month period. And there's also a security deposit involved. Some people will make that, if it's a couple of days, a small amount. My opinion on that is, regardless of the number of days, that security deposit, just like in a rental situation, is there to protect the new owner and the property in case something happens to the property damage-wise while the seller's still there or in the move-out stage.
And this is so critical in this market, right? Because, buyers, as much as you had a hard time finding this home to make an offer on, keep in mind that your seller is also trying to find a home to purchase to move. So any leeway or options that they have as they take in offers to still have some time to look for a home, this can be one of those things that makes the deal move forward, right? Because now they have usually 30 to 60 days to be able to stay in that property. Now, I do caution buyers, all of this is included as part of your documents that lenders will look at, and they'll include all those numbers in there. But if you can put that into the offer and give that seller an option to stay in the home while they shop a little bit longer, I think it goes a long way with sellers.
Yep. All right. So oftentimes when markets are at the extreme ends, creative ways of rising to the top with your offer come about. And a couple of things that have been happening that we've been seeing is buyers, instead of asking for closing cost help, are offering a seller credit. So the table has turned, it's flipped.
The tables have shifted.
Yeah, the buyer's offering a seller credit. Or another way is in our area, there are transfer and recordation taxes attached to every sale. And typically in Maryland, those fees, which are negotiable, but typically in Maryland, they're split 50-50. Aside from the buyer, if they're a first-time home buyer, they have a waive. They get one of the fees waived, but those fees are typically split 50-50. So instead of escalating price, buyers could offer a seller credit or pay for these transfer and recordation taxes.
And this is one of those good tricks that, if you think from the perspective of, let's not just increase our offer price by 20,000, but let the seller know that we'll cover some of their transfer and recordation taxes or their closing fees. If you've done your math well enough and that's actually going to come in less, it's a nice trick to use and have in your back pocket to be able to make your offer a bit stronger. In typical markets, as Brian mentioned, usually the buyers are asking for the credit to be able to help offset some of their closing costs. But we're in a new market, and in a market where the seller really has the right to command what they're looking for. So the more you can adhere to the seller but still protect yourself is a good way to build upon your offer. Now, Brian, let's talk about something that happened recently that really did not make me happy. And so I want to mention this so our buyers and agents, don't go into offer situations like this, because you're gonna upset the seller. When you write your offer, and you write your offer stating that you're going with a certain type of financing, make sure that you either stick with that financing, or if you change the financing, to let the seller's agent know. Because you and I had a situation where it almost appeared that it was a bait and switch.
Right.
They came in with one type of financing, which is one of the things that we use to select their offer. And then at a later point, they switched the financing, which allowed them to even inspect the property, even though they put no property inspection contingency into their contract. So always make sure that you are putting in what you're going to do. And if you have to change it, make sure you document that in as an addendum to the contract.
Yeah, this situation created a pretty big mess. The buyer came in saying that they were going to use conventional financing, and then they switched to FHA financing. Now, our contract states that the buyer can use alternate financing, but in short, there's more to it than what I'm saying, but in short, it can't impact the seller. And in this case, this was a real messy deal outside of even just that. But a low appraisal could impact the seller. Therefore, the buyer should not have switched from conventional to FHA. Now, going from FHA to conventional is okay, because FHA is a different type of conventional is a different type of financing, and isn't going to constrain the seller so much on a lower appraisal if they're depending on how much they're putting down. But I agree with you. Everything needs to be above the table. As the buyer's agent, I'm telling my buyers, do not switch financing, because sometimes they shop lenders too, and they'll switch the lender on top of that.
Mm-hmm.
Creates an even more stressful situation. But understand what you're going into with financing and stick to it. Changing it could cause all kinds of problems and cause you to lose your earnest money deposit if the deal falls apart.
Very true. Very true. So it's important, as you guys are shopping, to put together a strong offer, but make sure you protect yourself, and most importantly, understand your contingencies. If your agent does not put together a transaction roadmap, or we can use another term, a summary of all of the deadlines that need to happen for your contract, make sure you ask for it, make sure you're aware of it, and make sure that you're tracking to those items.
We would love to hear from you guys. Give us your thoughts in the comments section below on the things that we've talked about. If you're in the market and putting offers out, or you're a seller in the market, we'd love to hear you talk on the points that we discussed today.